Hey everyone, it's Chantel Girardi here from Online Business Marketing, and today I'm going to be talking to you about end of financial year and what you should be doing at the end of financial year as a purpose-led business owner, as a marketing manager, as somebody who's involved in the business. When you get to end of financial year, what should you be doing? Now, I know many of you will either have a bookkeeper or you'll have an accountant with somebody who does this stuff for you. But one thing that I can say for sure is that you still have got to have your nose to the ground. This stuff you need to know, because it's only when you really start to understand your business finances and your income and your expenses, and how to allocate your finances and what to do with it and how to plan and take control of it. Only then do you really have a really good understanding of how this works inside your business. And only then do you really have an understanding of how you can forward project and plan and goal set and take control of your finances as you plan for the next year ahead. So it is something that you should on an ongoing basis be doing with your bookkeepers and accountants. Make sure that you understand. I know that when I bring on my bookkeeper, I say to them, please, there's only one thing that I want to know every month, and I want to know my percentage of operating expenses. And that's what I want to know, because and I'll explain to you a little bit why a little bit later as I explain the profit first method, which is something that I follow. But it helps me know that I'm not overspending within my business and that I'm still allocating and putting aside my GST, and I'm putting aside money so that when my things come out, when I've got bills to pay, there's money there. I'm never backwards. I'm always in front of. And I can tell you something right now, that that is a really, really cool feeling to have as a business owner, that you're not constantly catching your tail and you're not going into debt the whole time. And trust me, I've been on the other side of the fence. So it's really, 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 really good practice right from the very, very, very beginning, when you start having it, that you live within your means, that you don't overspend. And this is why, where was I recently? I was somewhere. Ooh, I went to a networking meeting. Actually, Daryl was at that networking meeting, and they were talking about, as a business, how do you scale? How do you grow? And what are some of the key things that you should consider when you're doing it? And when they came to me and they asked me what was my 2 cents, well, one thing was, and none of this had been mentioned within the room, none of it had been mentioned by business coaches or anyone else. It was me that brought it to the forefront. But number one, it was making sure that you have control over your time. So making sure that you allocate time to work on the business and not just in the business, so that you're being proactive and not reactive. And the second part was knowing your finances, making sure that you are living within your means, because many people were going off, you don't like something, outsource it. And I was going, whoa, you can't. If you don't like something, you can't outsource it if you don't have the money. If you don't have enough money coming in to outsource it, that's the last thing you should be doing. In fact, it's completely irresponsible for you to do it. And it drives me nuts when I hear it, when people say outsource it, find someone else to do it, because financially you may not be in a position to do that. So that's an irresponsible thing for you to do it. And in fact, something that I always say is that if you do not have a six-figure business, you should be empowering yourself and investing in yourself, rather than outsourcing and spending it on somebody else, because you still have to manage that person. If you pay peanuts, you get monkeys. And you've got to make sure that you still understand what is involved when you do outsource things. And also, if you're not making a lot of money, that means you're not working a lot, which means you've got time to actually invest in yourself and get better at understanding these things. Anyway, regardless, I'm going to say it right now. I'm not a financial advisor. I'm not a qualified nothing when it comes to finances. All I can say is that I've been broke and on the bones of my ass, and I've grown a six-figure business by investing in myself. So everything I am going to speak on today is either myself and my own personal experience, and having worked for the last 10 years in this business with my clients and monitoring and watching them. It's got a hint of ChatGPT with a little bit of HI in it. And a lot of it is stuff that I've learned from either the Barefoot Investor or from Profit First, or through working with accountants and bookkeepers and scaling and growing my business. So do not take any of my advice as what it should be. Rather, you speak to your accountant and your bookkeeper. And I know my accountants and my bookkeepers, they know that there's certain stuff that I want. I want monthly to know certain stuff from them, and I will ask them questions constantly to make sure that I understand what is going on with my finances. I don't want to get to the end of the year and go, whoa, where the hell did that come from? I want to make sure that I'm ahead of the game the entire time. So let's talk about the end of financial year and what you should be doing right now. In Australia, so it is the end of June is our end of financial year. In South Africa, it was always the end of February, so it does my head in a little bit with the change. But what do we do when we get to the end of the financial year? So as I said, regardless, you should be on an ongoing basis, have control over your income and your expenses, and have an understanding of where everything is. But particularly at the end of financial year, what should we be doing? So number one, you should be reviewing your past financial year. Okay, so you want to be looking at your revenue and your profit analysis. So you want to compare your revenue, so how much you've earned, to your profits, which is how much you keep, okay, against the goals that you actually had or against the previous year that you did. And then you want to be looking at trends and irregularities. Okay. Then you want to review your expenses and analyze your expenses to see what you can cut costs on and reallocate funds more efficiently. And when I speak on the profit first method a little bit later, you'll understand that it gives you a guideline on how you can actually do that. And then you want to look at cash flow management. So review your cash flow statements to understand your liquidity and plan for your future cash needs. Now, it sounds really weird, but when I did this, it really helped just with one thing. So for example, I have a lot of offshore virtual assistants, and they were getting me to pay in US dollars. Now, when you pay in US dollars, the Australian dollar changes all the time. So I could never allocate how much it was going to be because my budget is in AU dollars, but US is up and down all the time. And many of them weren't even in the US. They'd be in the Philippines, they'd be in India, they'd be in Nigeria, they'd be wherever. So I just drew a line in the sand and I said, from now on, if you work with me, I'm going to pay you Australian dollars. I'll pay it in whatever you want it in, but my Australian dollars doesn't change anymore. And that made a huge difference to me being able to budget on my expenses because there would be more certainty in how much I would be able to actually spend. So number two, then you need to review your marketing performance. Okay, so you need to look at what campaigns worked effectively. What did you do that actually worked? The success of the campaigns that you ran, of Black Friday, of Boxing Day, what actually made sales and what didn't? So that you know whether or not you're actually going to duplicate that next year or whether or not you're going to make some changes to it. Then you're going to look at customer acquisition and retention. So were you able to keep the customers that you actually had? Did you retain those clients? And then you want to look at the most and least effective channels. And then you want to look at things like, did you get clients from networking, from word of mouth referrals? Are you tracking it? What about referral partnerships? Did they come from social media or running events? Did they come from email marketing? These are important things to look at to know where exactly did you get your money from. And thirdly, when it comes to marketing performance, you want to look at your content performance. So your content across different platforms, what worked or didn't work. There's no point if you're spending 80% of your time on Instagram and yet only 2% of your clients are coming from Instagram. It makes no sense. So you need to be able to make data-driven decisions based on reviewing your marketing performance. Now, thirdly, in our reviewing of the last financial year, we want to look at our content. We want to look at operational efficiency. So we want to look at systems and processes and go, how effective were our systems and processes? And where can we streamline things or automate things differently? So for example, we do a free breath work for business owners on a Friday, and we had a systems of going in and adding a Google invite and sending it to them. And we would look at how long that takes us and how many people are actually utilizing that system. It's actually an ineffective system. So there's no point in us allocating my virtual assistant's time to going and doing that if people are not utilizing that or respecting the process and actually using it. So it's like, you know what, we'll come up with a new system that we can automate that's actually going to save us time, because time is money. Time is money. So when we're looking at operational efficiency, we go, what's working, what's not working. Financially, there's no point in my VA spending time on this because that costs me money. What can we do better? And then we need to look at team performance. So we review our team's performance and we identify skill gaps and areas of improvement. Now, this is important because what we've learned is that if we ourselves are not learning that skill and getting better at that skill, it is costing us time. Time costs us money. If our team members are not developing their skills, if I'm not training them or allocating specific time for them in certain areas, they're going to be wasting a lot of time. They're not going to get better. And this is a toughie because I'll have virtual assistants going, I'm too busy. We don't have time for team training this week. And I go, well, hold on a sec. If we do team training, you'll have more time. And they're now it's becoming a given. Now they're starting to understand a little bit better. Because it's like, does the cart come before the horse before the cart? It's one of those things. And I get it. I completely get it. But I cannot say this enough. Allocating time for this is going to save you time in the long run, and time costs money. So if there's something that you're doing inside your business that it's taking you time repetitively, look at an operational efficiency of what system or process can you put into place, or is it simply that you can upskill in that area and do better? All right, so after we've reviewed our past financial years, we then go look at planning for the upcoming year. And the first thing is looking at setting financial goals. Now, I don't know where it was, but it was a conference or something last year that I went to. And I really loved this when they said setting financial goals. Because number one for financial goals is looking at revenue targets. And they have to be realistic. Okay? They've got to be realistic. You are either chasing more money in your business or you're chasing more time in your business. It's really very difficult to be able to get both at the same time. So just between you and I and the rest of you ever gets to watch this video, last year I made the same amount of money I did in my business, but I traveled for a third of the year. Think about it. So, because that's what I chose to do. I chose to travel for a third of the year. But what does that mean? And I made the same amount of money and the same profit. Is that a good thing? It is a great thing. If that's one of your values, if that's something that you want to do, if traveling's part of that. If traveling wasn't part of that, then that's like obviously not a good result, right? But you've got to look at it because at the end of the day, it's got to be a realistic goal. You can't say you want $1 million business, but you're not prepared to spend time in your business, and you're not prepared to spend time traveling less, and you're not prepared to spend time empowering your staff or bringing on more staff. You cannot have $1 million business if you're not prepared to do it. I remember when I went to the what's it called? The Forbes Summit in Australia, which was about 2 years ago. And they had billionaires that were presenting. And the billionaires were talking about how the only time they had to exercise, because exercise was a value, this one lady was talking, was she now has to, when she gets home at 8 o'clock at night, she goes for a 20-minute walk just so that she can like defrag and balance and bring herself down. And I was like, I would hate that lifestyle, so is $1 billion lifestyle what I want? I don't think so, and I thought maybe that's what I wanted, but I'm now starting to think that that's not what I want. So when is enough? At the end of the day, you got to set a realistic goal. What type of life do you want to have? And is that the life you want? And then don't beat yourself up if you don't have it because you don't want it. I went, you have your $1 billion business. I don't want that. I want to go to the gym every morning and I only want to start work at 9, 10 o'clock. So, at the end of the day, that means I'm going to grow a little bit slower, but that's okay. I'm going to have quality of life. It's going to be the life that I want. So don't beat yourself up. If it's the life that you want, then make sure that you're on track for that life, but it's got to be realistic. So in setting financial goals, the next one is budgeting. You've got to make sure that you've got a budget that aligns with your revenue targets. And for our VIP members, they're going to do a one-on-one exercise with me at the end of this today, where I've actually got 3 workshops for them, 3 worksheets for them that are actually going to help you come up with what that revenue target is, how much it is for the year, how many offers that you actually need to be able to sell in order to be able to do that. Because unless you're chasing a number, you don't know. At the end of every week, how many clients should you have? How many online sales should you have? How many products? How many, what should you be selling? If I know how much my expenses are and how much my team are costing me, great. Well, I now need to know how many things do I need to sell? How many strategies do I need to sell? How many online courses do I need to sell? How many group programs? How many, you've got to know how many of those you've got to actually be able to sell in order to be able to not just pay your staff, but also make the profit, the revenue goal that you're trying to do. And budgeting is part of that. The other thing is you want to make sure that you know how much is your rent. Like, I always come back to the personal stuff, your rent, your water, electricity, your rates, your car, like all those payments. How much do you actually need to make, be able to cover that as well? Super important. And then, of course, you've got to look at other things like investment. How much money do you actually have allocated to spend on marketing, to spend on technology, and to spend on personal growth? Last year, I spent way too much money on traveling for business. But, as I said, I made the same amount of money as I did all other years. So that's great. But I also spent a lot of money in that particular area. So my eye is on that. And I've got to make sure now that when I travel for business, that it actually makes money, else it's not worth it, right? So this is where this financial planning comes in. It's that awareness of, yeah, it's great. I can travel for networking and blah, blah. But at the end of the day, I've got to be able to monetize that. If I can't monetize that, it's not worth it, right? So how much does that cost me? And how much money, at least, to be able to recover? Because you can't recover the time lost. So how much money do I need to at least recover the cost of that? So number 2, and planning for the next year, is your marketing strategy. So you've got to look at your marketing goals for the year. What worked, what didn't work, how are you going to increase brand awareness, how are you going to improve customer engagement? So your current customers, how are you actually going to keep them engaged? How are you going to keep them on board? How are you going to keep them happy? Because so many of us are constantly looking for new clients, but we have to make sure that we're improving customer engagement as well and retaining customers. Super, super important. And then you've got to look at, do I need to launch new products? Because if my products are not selling, if something is not selling, is it because I haven't sold it well? Or is it because I've got the wrong customers? So is it part of my marketing, or do I just have the wrong offer? And I think this is really important to look at, because it could be your marketing that's wrong, but it could be the offer that's wrong, or the way that you're communicating that offer, or the audience that's wrong. So where is that going wrong? And you need to look at your planning your campaigns for the next year and go, well, if I'm planning my campaigns, am I selling the same offer, or do I need to look at a new offer? So for example, customers buying persona changed in November last year with the looming recession across Australia. So that means we needed more convincers. That means that their buying habits change. They're still spending, but they need more convincers, they need more touch points, and we've got to make sure that the way that we communicate that offer to them is values and outcomes based, or else they're not going to spend with you. And the last one, when it comes to looking at your marketing planning, is your channel optimization. Which are the channels you're going to spend time on? And again, that's just going in and making sure that wherever you got customers from, or have been getting customers from, how can you go and replicate that? How can you go and duplicate that? And are you spending more time in that? So for example, there was a time in my life where I was getting lots of clients from networking. Then certain networking groups dried up and I didn't get clients from them anymore. So is it worth me investing money in those channels? Is it worth me showing up weekly, fortnightly, monthly to those groups if I'm no longer getting referrals and clients from those groups? No, I'm going to invest more time in time and money in where I actually get clients and customers from. Just remember, time is money, time is money, time is money. And then looking at operational improvements again. So how can we increase or improve our efficiencies and our productivity and what it is that we do? As I said, time is money. So me going to these networking groups, if I like going for coffee and I like going for breakfasts, but it's not generating and paying customers, well, I've got to look at new ways to manage my time more efficiently. Planning for training and developing to address any skill gaps, as I mentioned before, and then investing in new technologies that can streamline operations. So for example, with us, we switched over to OBM Hub. We were paying $170 a month for Active Campaign. We were paying $180 a year for Calendly. We were paying for social media scheduling platforms. We were paying for Zapier. We were paying for, so when we're paying for all these things that were costing us, we're paying for LearnDash for the year as well, which I think was $300 for the year. And yet we moved to OBM Hub. We're paying 147 AU a month. That's even cheaper than just one platform, and we're paying for 5 different platforms. So yes, it cost us time and money to move everything across to one platform. However, we've now saved in our systems and our processes by so much more. And it gave us an opportunity to relook at things and make sure that we had, that everything was up to date. All our lead funnels and everything were up to date. So yes, it's taken us quite a bit to do it, but worth it because we're saving so much money per month. So looking at technology upgrades and where can we save money? All right. So then for number 3, it's looking at the financial fundamentals that you need to be across. And this is the boring stuff that I always hound my accountants and bookkeepers with. But at the end of the day, you've got to understand your financial statements, looking at your income statement, your balance sheet, and your cash flow. Number 2, you've got to make sure that you are across your tax planning. So as I said, you do not want to be behind with your tax obligations. You want to make sure that you're meeting your tax obligations and that you're planning for tax payments. So for me, it's around GST and BAS payments, making sure that there's allocated money and that I've constantly got payments going into the ATO to make sure that I'm up to date. And then looking at deductions and credits, so identifying all available deductions and credits to minimize your tax liability. So for example, how much super as a self-employed business owner or as a company, how much super did I have to put across? How does that affect my tax? What special requirements do they have at the moment? So that I can make sure that I am spending money and allocating it as best I can. Number 3, it's looking at financial ratios. So your profitability ratios, your liquidity ratios, and your efficiency ratios, and just making sure that you're just touching base the entire time and asking these questions, because unless you ask your accountants and bookkeepers, they don't volunteer this information. And then for the last one that I want to talk about today is implementing the profit first method. So I absolutely love the method, and for me, it just really, really helped me. The profit first method was developed by Mike Michalowicz, and it's a cash management strategy that helps businesses prioritize profit first. So what happens usually is money comes into a company, and then you just go spend the money, and then you go, crap, I've got no profit, I can't spend, I've got no profit, I've got no money for GST, I've got no money to spend on anything, and basically you've got no cash flow. So this over here then basically says that when money comes in, you straight away allocate it. So it doesn't allow you to go down into the trenches and then try to crawl yourself out. It straight away says that as money comes out, you allocate it. And then it gives you the discipline then of being able to spend in those buckets based on percentages. So the traditional method was sales minus expenses equals profit. And there was never profit left because you would just spend. But profit first is sales, take your profits out, and then whatever's left, that there you can only spend on your expenses. And I love the discipline of that, because that to me is like, you cannot just go and fricking outsource it. You can't outsource it, but if you don't have it. So only if you've got the money will you have it, but you've taken the money for GST, you've taken the money for profit, you've taken it for everything else. So what are the steps for implementing profit first? And as I said, you can go read the book, speak to your accountant and bookkeeper, but this is on my research and my understanding how you implement the profit first system. Number 1, you set up different bank accounts. So you've got an income account where all your money comes into it. You've got a profit account where all your profit goes to, your profitable income goes to. And then you've got an owner's compensation account, which is a portion that's allocated for your owner's salary. So you've got an income account, a profit account, and then an owner's or salary account. Then you've got a tax account, okay, where your tax is immediately taken and put it into that account, so you're not left scrambling. And then you've got an operating expenses account. And remember what I said to you, from my bookkeeper, all I want to know is that my operating expenses are are basically sitting at 30% the whole time, because then I know that this is working for me because everything else is being allocated, right? So then you want to determine your percentages. Now, percentages are determined on the type of business that you are, but I'm going to start on the entry level one because that's always the good basis for you to start on, okay? So a common starting point for small businesses is that profit is 5%. Owner's salary is 50%. Tax is 15%, and operating expenses is 30%. And then you want to allocate those funds. So whether or not you do that weekly or you do that fortnightly, you do that monthly, you want to make sure that every bit of money that's come in, you've taken those percentages and put them into the right account. Okay. As your business grows or changes, you need to look at, you need to read the book, speak to your accountant, bookkeeper, or there are specific profit first bookkeepers and accountants that follow it. But just to give you an example, okay, if your business had an income of $10,000, okay, you would put into the profit account 5%. So 500 go into the profit account. The owner's salary account is 50%. So 5,000 of that would go into the salary account. The tax account would get 15%. So that would be $1,500. And then the operating expenses account would be $3,000. Okay. So from 10,000, as I said, this is me. This is just what I do. I like to focus on that operating expenses. That's made me make good decisions in my business. That was a great starting point for me. $10,000 comes in. My 1.5 goes to the tax account. My $3,000 goes into my operating expenses account. So all my software, my marketing, all my operating expenses for my business, my staff and everyone comes out of that $3,000. And I got rid of a team member last year because my operating expenses was more than that. So you can imagine if my income's coming in, but say I've got 4 VAs and it's costing me over my operating expenses, I'm living above my means. So I went and made sure that my team had better skills, strategies, and systems in place so that they were more efficient and could get more out of the hours that they work for me, so that I got rid of the 4th person. They now had to do all of that work, and I had to empower them to work more productively because some of them were double doing tasks. So I'm not slave driving them. My team are very happy. I'm not slave driving them. However, but what they do know is they now have systems and processes, and we've automated more stuff so they can work more effectively. So I brought down the cost of my team so that I was living within my means. Super important. So many people I speak to, they want to go get another marketing manager, go get another VA, go get another person or whatever. But what they really need to be doing is investing in who they've got and what they're doing, making sure that they're doing better. So the benefits of profit first is to make sure that it ensures profitability. So by prioritizing profit, businesses can afford the common pitfall of having little or no profit after covering expenses. So it makes you stay and live within your means. It disciplines your spending, so it forces you to operate within your means, promoting lean and efficient operations. And then for financial clarity, it provides a clear and simple framework for managing cash flow and reducing financial stress, because you're now living within your means. The money is always there. So end of financial year planning is essential for setting your business up for success. By thoroughly reviewing the past year and then strategically planning for the next, you can ensure that your business remains profitable and productive and aligns with your purpose. Implementing the profit first method can help further solidify your financial stability and growth. All right, so that is that for today. Thank you so much for those that are watching online. If you do want to be part of the live audience, you do need to be a paying client or a VIP member. We are now going to go ahead and we're going to look at 3 worksheets that help us map this all out. But you do need to be one of our VIP members in order to take advantage of that and the Q&A.